Hello, my name is Nifty Gnome and welcome to my live action bookkeeping video. This is video number 7 in the Grand Gate Gardens case study, and this video covers May week number 1, so that's May 4th to May 10th, 2025. And we'll be covering debit refunds, bounce checks, HST that doesn't calculate, and so much more. Check out the link below to find out how to download the documents, request a topic, or find out more about my case study project. Now, on to the bookkeeping. So if you are following along at home, last week my bank feed upload did not include the May transactions for that period that went all the way to May 3rd. So I'm just going to go to transactions. Now I have updated the file on the downloads now. So if you re-download it, or if you aren't following along live and this is a little later, this won't be an issue for you. But if we go to the categorized, I'm on the Canada Bank checking feed, you can see it only goes to April 30th. And so what we're going to need to do is we're going to need to go to April week 5, go to the downloads, and here's the QBO files. I've updated this to include the first little bit of May. So let's go ahead and upload this new updated Canada Bank checking file. We're going to go continue, Canada Bank checking, done. And sometimes QuickBooks knows that bank feed info has already come in and doesn't duplicate it, and sometimes it doesn't know. It just depends on the bank feed setup, the type of bank, and so on and so forth. In this case, we can see that the monthly fee of April 30th is showing up in the for review and also in the categorized. So this was part of last week's download, the May 30th, but the 2 May ones weren't. So this is an excellent example of when we actually need to exclude a bank feed info line. I have seen it in the past where the actual bank feed itself sort of doubles up things sometimes. So really the PDF statement is the sort of the reference to make to confirm that everything is how it should be if you're having struggles with something like that. It just doesn't happen very often, but when it does, all you need to do is you click this one and you say exclude. So now that one we just excluded is sitting here in excluded. Now we could also delete it as well, but I'm going to leave it there to show an example of where the excluded ones are in case you ever have excluded the wrong ones and need to undo and bring that back over to the bank feed. So now let's move ahead into May week 1. So we also have the bank feed downloads here. Again, I don't start with the bank feed clearing. I start with the source documents, but a lot of times you're going to want to reference the bank feed when maybe you've got paperwork that doesn't say how it was paid and you're like, was it paid by MasterCard? I've got the feed. Let's have a quick look. So that's why I start off with the bank feed uploads. We're going to use the QBO files, and these are the two we're going to be uploading. We've got Canada Bank May 4th, may the 4th be with you, to May 10th, and also the CIBT line of credit. So let's go ahead and drop this down, say upload from file. I'm going to bring over the Canada Bank one first, and that's Canada Bank checking, continue, done. And there we go. We've got May all the way up to the 9th. And let's go ahead and also upload the CIBT line of credit. Bring that one over. And that is CIBT line of credit and continue. Done. And if we flip the tile over to the CIBT line of credit, we can see there's some stuff there for us as well. But first, let us start with the source documents. So we are in week number 1, and I'm going to open up the with notes, and we'll start with the charges. There's only one charge today, and this is actually a very interesting charge. This charge, and if you remember, I call things charge entries if they're not a bill entry. A bill entry is the type of purchase or expense that a business makes that has a bill date that is different than the payment date and or has a bill number that needs to be tracked and a check number that needs to be tracked and or is multiple bill numbers being paid by one payment. So those are the different times that I would use the bill entry screen for those types of expenses and purchases. But for expenses and purchases that hit the bank the same time as the bill date or the date incurred, and there's no check number or payment number that I want to track, we just go ahead and use the expense entry screen. So I call it a charge because you don't have to track an entry and a payment, just the one. So what is unique about this Home Depot charge entry? It's a refund, and it's not just any refund. It's a debit card refund from the bank. So when QuickBooks, I believe, was being designed and created, it was being designed and created for a certain type of business in its mind originally. And these types of businesses generally use checks to pay bills. And if they have charges, they generally use a credit card, not a debit card. This is something that I think is just sort of in the mindset of the creators from, I don't know, 15 years ago. Who knows? The reason I think it, though, is because they have an option to add a credit card credit right here, but they don't have an option for a debit card credit. And so we need to be creative in how we enter these. So just plug out to QuickBooks into it. Nowadays, we really need a debit card credit option because the two different ways that I'm going to show you aren't fabulous. They're just workarounds. And I would really love for us to be able to do a debit card refund. So there are two different ways to enter this. The first one is quick and easy, but misses something. And the second way is a bit long and annoying, but works with things like Dext, and also has more of a history for us to find. And I'll show you exactly what I mean. First of all, I'm going to show you the way that's quick, but doesn't work well with document syncing software like HubDoc or Dext, and also doesn't track the history in the subledger like we like to see. So let's bring this receipt back over first of all. We can see it's a refund. It's for Viagro. Now, I didn't explain how to do it in my Gnome note or why we chose purchases and materials COGS, but best practices are, and it makes logical sense when you think about it, is you want to offset or categorize it to the same account that it was purchased against. So if you know what the category is when Sarah purchased the Viagro was put to, then that will be whatever that category is, that's the one that you're going to want to put in the credit refund towards. And that just makes sense when you stop to think about it. So I'm just going to go over, first of all, to expenses suppliers, and we're going to go Home Depot. And there is one purchase, and it happens to be $85.46, which is the amount of the refund. So maybe she found a better one, or she didn't think this one was good enough, or for whatever reason. And here we can see that we've categorized that when we purchased it to purchases and materials, cost of goods sold. So this is why we're going to put the refund to the very same category. So I'm going to show you the quick way that I don't love. Notice here we've got the one debit receipt that we put in back in April. And what we can do is if we go to the Canada Bank checking, we can see that refund is right down here on May 9th. And we could enter it from the bank feed the shortcut way. And the options for entering it from the bank feed are the deposit or the sales receipt. So if we put in a sales receipt, we can't change what the HST line is. A sales receipt is going to default to HST on sales, and it's going to mess up our HST return. So if we're entering it from the shortcut way, we have to do a deposit, okay? And again, if we wanted to enter it the big screen way, I'll show you what that looks like after we enter it the quote-unquote shortcut way. I call when we enter these transactions from the bank feed the shortcut way because it's nice and small, and it's already got a lot of the information in there for us. So we're going to say that this is a deposit. So it is Home Depot and not sales of product income. QuickBooks thinks it's that because it's defaulted to deposit, but it's actually purchases a materials cost of goods sold and the tax on that. So because it's a deposit, we have that choice of what line of the HST return that this is going to go towards, right? And this is not going to go towards HST on sales, like HST collected. It's going to be a reduction of the HST that we've paid on purchases. So we'll go ahead and do that. And I'm just going to say no for now. And here is how I would enter this refund the quick way. And I'll show you why I don't like it. So we're going to go ahead and hit add. And then I'm going to go to the search. They've changed where search is. And then hit the deposit. This is what we just entered. That's why I love that search. You can jump to what you just did. And this is what the big screen way is of what we just used the bank feed shortcut way to put in. We can see that the QuickBooks transaction is entered. It says Home Depot, and it is married to its bank feed info line. But if we go over to suppliers or expenses suppliers, and we type in Home Depot, that receipt is not showing up on Home Depot's history. And if that had been a credit card refund, it would show up here. So this is my call out to Intuit QuickBooks, why we need that debit refund option. Another reason we need it is because if you're using document syncing software, you can't really do what I just did from the expense or cost section. So how would we put this in from a way that both shows the history in Home Depot's vendor history and also is something that we can sync across from document syncing software like Dext, HubDoc, etc. So first of all, let me go ahead and delete the thing that I just put in the quick short way. And again, this is fine, it works, but you can see why I don't love it. So we're gonna go delete, yes, delete. So now it's put the bank feed info line back onto our bank feed because we have just, because we deleted the transaction that it was married to. And so now what we're going to do is if you were syncing this over from costs, you could say that it's actually a credit memo from a supplier. So I'm going to go ahead and do that. So let me bring this over so we can see it at the same time. And if we were to sync this over from document syncing software like Dext, we do have the option from the costs to do a supplier credit. So let's go ahead and we can do the supplier credit without document syncing software the big screen way as well. And so I'm going to say Home Depot like this, and the payment date was May 9th. For reference number, I'm just going to say debit. And the category, again, was the purchases and materials. And then the amount before tax was $75.63. We don't make this negative because it's a credit. It's already considered quote unquote negative. And there was HST on purchases there. 85.46 matches 85.46. And you'll notice we're decreasing, because this is a supplier credit, we're decreasing purchases cost. That's going to go down with this entry. And we're decreasing HST paid on expenses. That's going to go down with this entry. And what's going to go also down with this entry is accounts payable. We want the bank to be the other side, but this is actually going to be offsetting accounts payable. So I'm going to go save and close. And now if we go over to suppliers, we'll see that Home Depot now has that history. Now it is showing both entries, both the purchase and the refund. The only problem with the refund is we're saying, and Home Depot owes us money, right? So now the last step is Home Depot giving us that money. And we do that again with the bank deposit screen. And again, we can do it the big screen way this way, or we can do it the shortcut way right from the bank feed. So I'm going to come down here. Here's that refund. It's Home Depot, and this time actually we're going to say accounts payable. Remember, that credit memo didn't decrease the bank, it decreased accounts payable, what we owe our vendors. And so what we're going to do is we're going to offset that by putting accounts payable here. And we're not going to be claiming the purchases reduction again, and we're also not going to be claiming the HST reduction again. So let's just put that out of scope. And then I'm going to go add. So we've cleared this off of the bank feed. And again, if we were doing it the big screen way, I kind of don't like where the search is. I know I've categorized it. Give me my search bar. Oh, QuickBooks. There it is. I don't like where that search bar is, but that's just because I'm used to things being quick and easy. So here is that bank deposit that we just put in, the shortcut way, and this is what it looks the big screen way. And so you can see we've hit up accounts payable, and because here's the key, because we put accounts payable in the tummy of this entry and said that the vendor name was Home Depot, and notice it's out of scope for purchases, check it out. Now if we go over to the suppliers and we say Home Depot in here, now for some reason it shows up. So we're almost there. It looks like we're done. The open balance is 0. But these two items here, and I can go ahead and add the balance. I find that very useful. You can see that they both have an open balance still, right? So they're both sort of open. And when I say housekeeping and at the end of the month and cleaning up things, I'm going to go to reports, and I'm going to go to unpaid bills. And you can see that even though Home Depot has a balance of 0, we have an open and unapplied deposit and an open and unapplied supplier credit. So what we're going to need to do is we're going to need to get to the bill payment screen in order to apply those to each other. Now, to get to the bill payment screen, one way is to open a bill and hit Pay Bill, but we can't open a supplier credit and hit Pay Supplier Credit. And we also can't do Pay Bill right from the deposit. So we're going to have to use the third way to get to my bill payment screen, and that is by taking an expense and switching it to a bill payment. So if we go new, yes, there is a pay bills option here, but it's not the bill payment screen that as an after the fact bookkeeper I use a lot. This pay bills screen is excellent for if you're doing a check run and paying all of your vendors in real time as an office manager. I'm an after the fact bookkeeper, so I prefer using just the bill payment screen. That's how I roll. One of the ways I do that too is I'll go to an existing bill payment and just go save a new. But here's one way that I like to also go there is I'll go to expense, see how it says expense at the top. Let's move this over a bit. So see how it says expense at the top, and I'm going to say Home Depot. And if I pull up a vendor or a supplier that has unpaid open items, look at what QuickBooks does. It says, hey, user. That sounds like, hey, loser. It says, hey there, just so you know, you've got open items. So if you're entering an expense, is this maybe a bill payment? It's trying to be helpful, and today I find it helpful. So we can add. Notice what happens. It says expense. There's the little add button. I'm going to click add, and boop. Now it's changed to a bill payment. So here's the bill payment. I'm going to hit up cash because it's going to end up being a 0. And I'm going to also select down below. Don't forget, you can scroll down to see those credits that are available and check that off. So the deposit of 85 offsetting the credit of 85 makes this bill payment amount 0, and I can go save and close. And now if I were to refresh this report, I could have hit the refresh there. We can see that those two items are no longer open and they're cleaned and up off of our report. And going back to expenses, suppliers, let's see what the vendor history looks like for Home Depot. So say Home Depot. And here we can see that the items are closed and we have a bill payment. So this way isn't also great, right? It is a way that we can use the document syncing software. It is a way to make sure that we get the debit refund showing in the vendor's history, but it takes a lot of steps and it's also very ugly. Instead of one, debit credit in my transactions, I have 3 separate transactions. So that is the 2 different ways that you can handle a debit card refund in QuickBooks Online. So that was our only charge in the first week of May. So let's see what else is here. We have a lot of bills. So I'm going to go ahead and burn through these bills. The first one is Gnome Hardware. And if you remember from last week, Gnome Hardware, she now has an account with Gnome Hardware. So that means that these are no longer like receipts, like charge entries. They're actually bill entries now because she's going to pay this bill later. She's going to get a statement at the end of the month of everything that she's charged to her vendor account and pay that statement. So we can see right here that she purchased some mulch. Let's go ahead and put that into QuickBooks. We're going to go to New Bill, and this is Gnome Hardware, and it's May 5th. And then the bill number is XZ3095. And last time we had said small tools and equipment, but this time it's actually purchases and materials COGS. We don't have to say, it remembered that we had shovel last time. You can change whether it remembers or not in the settings, but I actually find it very useful. It's just, you just need to remember to delete the things that you don't want from last time. And this says exclusive, so we're going to put the pre-tax amount here of $395.28 with HST, and that is $446.67. I'm going to go save and new because we've got more bills to come. Next, we have Buried Blooms. Let's take a look at Buried Blooms. So Buried Blooms, and she is paying more than one bill at a time. So even though it's paid by a credit card, we're still going to put this in as a bill entry, and you can pay bills marked by credit card. Now taking a look, 599035, that's the one we have here, and also 599264. Is that in this week? Because if it is, yep, it is. That means that we can also enter the payment from the payment notes. Excellent. So let's go ahead. I'm going to put this to the side, and let's go ahead and say that this is Buried Blooms. Bill date also May 5th. Bill number is 599035. Purchases and materials COGS, and the amount. So there's no subtotal here. So this is an example of one that's easier to enter with the inclusive of tax option. And that's what we did when we entered this bill last time, and QuickBooks remembered that to try and help keep things easy for us. But it's important to note how much that flips and to always keep your eye on it. So inclusive of tax means what is the whole bill including tax? 451.90. With HST 13% Ontario, which is $51.99. So I'm going to go save and new. And I'm going to skip the Ontario Power right now. Just go to this Buried Blooms one and do all of the Buried Blooms at the same time so that I can enter that bill payment as well. And we can see here that Sarah's written the same note to help us out. Important to note, she also bought a trowel. So a trowel, I wouldn't consider that purchases and materials cost of goods sold. That could either be small tools and equipment expense. So it's a tool, but it's a small one. So it's expense, it's under $500. Or it could just be supplies. Maybe it's a very small tool that you go through and lose quickly. So it's more of a supply. So both small tools and equipment expense and supplies for the trowel would work. The reason I'm going with supplies with my Gnome note is because that supplies is a common GL account that people tend to have, and small tools and equipment expense is more of a Naomi one that I don't see quite as often, but I think is very, very useful. So let's go ahead and put this one in. It's going to be a lot of fun because there's no subtotal, and I want to put the trowel for $39.99 to its own line. So let's go ahead and put this one in. Buried Blooms, and this is May 7th. Notice the date order here. This is a quick pro tip. When you file your paperwork, file it by month, because then you will know this is May 7th. It's another great reason why you want to stay current with your bookkeeping, because otherwise you'd have to stop and look at like a statement, or maybe look at another one that the order's in, right? You want to do things quick and easy, and you don't want to make work for yourself. So just simply filing your paperwork by month avoids this, oh, what's that date moment, and you can just keep on burning on. So let's go ahead, and the bill number is 599264. First of all, I'm going to switch this to exclusive of tax, right? So when we're doing individual lines, I find exclusive of tax easier, and also when we have to force the HST, which we'll talk about when we look at the Ontario Power Bills. But in this case, I'm going to switch this to exclusive. Then I'm actually going to do the smaller amount first. So I'm going to go ahead and put supplies on this first line. And for supplies, $39.99 plus HST, that is $45.19. So that is the first step to this. And then after that, I'm going to go ahead and say purchases and materials, like this. And now I'm going to do a little bit more math. I'm going to say that 318.58, that's the entire bill, minus the tax, 36.65. That is going to give me the subtotal that we don't see on this bill. And then I'm going to subtract the $39.99 from this subtotal that I calculated. So minus $39.99. And that is the pre-tax amount of the bulbs without including this trowel for $39.99. So the math of bookkeeping, it's really just usually just adding and subtracting. It's usually pretty easy math. And of course, on that pre-tax amount, there is HST. Let's see if the math comes out. Yep, $318.58, the total of the bill, and the HST is $36.65. Excellent. So I'm not going to go save and new. I'm just going to hit save. Now notice that right now, there's no make payment option here at the top right because this bill doesn't exist yet in QuickBooks. We have to save it. Watch what happens when we hit save. We can see that now that make payment does pop up. And so if I click make payment, now I can go ahead and enter this payment information that she's given us. So I always enter in all the information that is given at the time so that when I'm troubleshooting or clearing the bank later, there's less questions and it just goes quicker. So I'm now at the bill payment screen. And notice that it says that the account that it's being paid out of is Canada Bank. Nope, it is Biz MasterCard. So let's go ahead and put it to the triangle MC. And the payment date is May 13th. So let's go ahead and say May 13th. And I'm going to get rid of the reference number. I don't like a reference number on my, like the ones that auto-populate, because if I save this one, the next one's going to be 2, and the next one's going to be 3. And once that number gets bigger, it becomes a red herring. Is that a check number? Was there a typo? So I'm going to delete that reference number. And I'm going to check off both of these. When I've checked them both off, it comes to $770.48. And that is how much she said she paid for these 2 bills. Perfect. So we go save and close. And let's look at what is next. So actually next are the Ontario Power Bills. I skipped them just to get to the buried blooms. We'll open this one up. This is her personal. And I already put this, shall I call it red herring, into last month's live action bookkeeping, again, as a discussion point, the double assumption paradox. And the double assumption paradox is that the business owner assumes that the bookkeeper knows what can and can't be claimed. And because the business owner doesn't necessarily feel confident in what can and can't be claimed, they just throw everything that they think might be claimable to the bookkeeper. And so this business owner, Sarah, has it in her head, I might be able to claim business use of home. I've heard that I can claim my home office expenses. Now you can, but this is usually done as a tax adjustment at the end of the year. It is something that a tax advisor or an accountant has more of an understanding of that can analyze the situation of the business. Now, if you've spoken to that accountant and there's a certain way that they want you to enter into the bookkeeping in a live, ongoing manner, that could be a discussion, but usually the home office expense or business use of home is actually claimed as a year-end tax adjustment that you want to get in actually before you file the HST for the period ending December, because you want to make sure you claim the prorated HST as well. Or if you miss it, that's okay. It's a carry forward after an adjustment given to you by the tax preparer. So let's take a look at this. We can see that I have a note here, do not enter this. She's mentioned that it's paid her personal bank. If it was paid by the business bank, we would put this to owner's draw. Unless it was a corporation, we would put that to shareholder draw. So shareholder draw for a corporation, owner's draw for a non-incorporated business. And because though there might be some business use of home, and because somebody says, oh, do you have the utility bills to the business owner? And they say, oh, I gave them all to the bookkeeper, right? Don't throw this away. Put it somewhere safe. Maybe save it in a file that I usually a folder I call personal expenses, or maybe we can call this home expenses. So keep it aside in case anybody asks for it, but otherwise we're going to do nothing with it in the bookkeeping. Now, we knew that this was personal because service address is 185 2nd Street. That's Sarah's personal address. And that's why it is extremely useful to know what the business's operating address is, where they have like a retail space or a warehouse or a yard, and also know what the business owner's personal address is so that we can make those calls as the paperwork comes in. Now let's take a look at what is next. Next, we have another Ontario Power bill, also May 6. And we can see that this one, it's billed to Sarah for Grand Gate Gardens, and it's actually for 465 Main Street. And if we have our Grand Gate Gardens reference paperwork that we downloaded at the beginning of the case study that said that the business is renting space for the greenhouse and their gift shop at 465 Main Street. So this is a legitimate 100% business expense because this is the business property. So let's go ahead and put this one in together. It's going to be a fun one because there's an Ontario electricity rebate that does not have HST associated with it. And also we're going to remember to put in the online banking payment. So I'm going to move this over. So let's go ahead. We go to new bill. And this is Ontario Power, and the bill date is May 9th, and then, was it May 9th? No, it was May 6th, sorry. And the bill number, I'm just going to say May 6th. I put the TH because if I said May 25, you might think it's the year, and the TH helps you know it's a day, but you don't have to put any bill number in. There's no bill number. The reason I put the bill number May 6th in is because when I'm sort of looking at the history, I can see May 6th, June 6th, July 6th in the vendor history, and then I can see if I'm missing one or the cadence of how the bills come out, but that's just a Naomi thing. You can just leave that blank. And the category is utilities, like this. Now, the tax is interesting on these utility bills because there's no HST on that Ontario electricity rebate. So what we're going to have to do is we're going to have to say inclusive in order to get that in. So we'll say the amount is 195.34 and then the sales tax is HST. But the problem is that inclusively, because it doesn't know about the tax rebate, it thinks the HST is $22. Now, we can just change that to $31.27. That's the HST line, $31.27. But it's important to look and see those things because you don't want to miss like almost $10 of HST credit you'll get back on your refund dollar for dollar. So what I think is really exciting is QuickBooks only just changed this. So I had to re-record this just a moment ago. Because I was when I started using QuickBooks, and I really think this has happened within the year, is that If it said inclusive, you couldn't force the tax. It would change the total of the invoice. But I was happy to discover that it did not do that. And I can click on the description and it's not changing the HST. So that's really exciting. Thanks so much, QuickBooks. Something else that's interesting though, is because we forced the HST, it's got to be the last thing that we change. For example, if I were to delete an empty line or something, if I were to do something that made QuickBooks reevaluate what's going on in the tummy, look, it put it back to 2247. So if we wanted to, we could split this up into 2 lines. It would be long, but in order to do that, I would first of all say exclusive of tax. I would say 195.34 minus the HST plus the rebate. All of that has HST on it. So you can see we've got to the 3127 with QuickBooks's natural analysis of calculation, and would also then put the rebate on a second line minus 7650. And of course that is out of scope or 0 rated or exempt. Not a big deal on the expenses, a big deal on your sales screens. And we've talked about that before and we will talk about it again. But on the expense screen, it's not as big a deal as long as it's one of the zeros. And we can see this is another way of putting that in. And when we do it this way, because it naturally is calculating the tax, if we were to delete a line or change something, it's not going to trigger a reevaluation in the HST box. But personally, I really like my one-line method. I like my one-line method because it keeps the general ledger a little bit neater. It's just, it's not a huge deal, but if we had 2 lines in this entry, that would mean in utilities for this one bill, there would be 2 GL lines. So I'm going to say that there's HS inclusive, 195.34. It has HST in it, and that HST I'm going to force to 3127. And the new QuickBooks is kept my total, and I'm going to go save, because here Sarah has said paid with online banking BizBank June 5th. So since I hit save, we've got the make payment button arising, and I can go ahead and make payment, not from the credit card account, but from the Canada Bank checking. And I'm going to make the payment date June 5th. So we're going to flip over to June 5th. And it's important to not let that reference number populate to the next check number. It's increasing it because the last check I entered was 016. So it's trying to help me out. But again, this is going to be a red herring later. Like, oh, did we pay it by a check? Or if we're looking up check 17, this might come and distract us from what we're actually looking for. So let's go ahead. You can leave it blank, or you can say online banking, whichever works for you, as long as it's not a fake red herring check number that doesn't exist. And we can see that it's already checked off for us because of the way that we came into the bill payment screen from the bill itself. And then we say save and close. Okay, let's take a look at what is next. We've done the buried blooms. Now we have this is a Funky Gifts wholesale. Pull this up. So this is Sarah buying products for her gift shop. And we can see that she has paid with check 018 on May 20th, 261166. And this is not that amount. Let's see if there's any other Funky Gift wholesale bills in here. And we can see that there is no other Funky Gifts wholesale. So we can't put that payment in yet. We'll have to put that payment in next week or the week after, whenever we receive the second bill that she's paid. So let's go ahead and put this one in just as it is. So again, we're going to go new bill. And this is Funky Gifts wholesale. And the bill date is actually May 7th. It's another one that has it a little, I call backwards, but there's really no official way. But again, just another plug for filing your paperwork by month so that you don't have to pause and think, was this July or was this May? And then the bill number here is 59801. And it is purchases, retail COGS. And then the total charges before tax is 1067.22, and the HST 138.74, 120596. Great. We're just going to go save and new. Take a look at what is next. Next, we have the Oodo bill. And if you remember from the last month when we entered the April 7th Oodo bill, you will remember that actually this Oodo bill also includes Sarah's spouse, Jane. And right now in this case study, Jane is not working with Sarah in the business. And so this is not actually this portion for Jane of the $33.90 is not business expense. And the $390 that's part of that, even though it's HST for a non-business thing. So it's not a claimable HST credit either. And so this is an example of something that I would call mixed use. And again, what you want to do is you want to talk to the tax preparer to find out how they would like you to enter these mixed use expenses, because they are going to work with the business owner to understand how much is actually claimable and business related. So sometimes we might prorate the cell phone because Sarah does have personal use in there as well. But in this example, Sarah has talked to her tax preparer and has said, there is no phone line right now on the property. So if this, her cell phone is 100% the only business number that is available. And so the tax preparer and Sarah have given instruction to claim these cell phone expense at 100%. So I am not an accountant, and this is not tax advice. This is just how we're doing it in Sarah's case study. Definitely Jane is not part of the business, and so definitely we cannot claim Jane's cell phone expense. So how are we going to do this? And also, why am I putting it in as a bill? Because the payment is on a different date. And sometimes what happens is a business owner gives me their personal credit card or their personal bank account, and they circle all the things that are business and say, make sure all of these are in. And so that's just extra work and more time and less accuracy and more questions. And so don't do that. Always just, if it's business, pay things with your business banking, business credit card. But this is a mixed use. So I am going to go ahead and put it in as a bill and a bill payment, even though it was paid from the personal bank. There's a few different ways to approach it. This is just the way that I'm giving as one example and one option in today's case study. So let's go ahead and put that one in. So the bill date, the bill is Oodo, and the bill date is May 7th. And again, I'm just going to say May 7th in here. That's a Naomi thing. You don't have to do that. And cell phone, let's see if it's the same as last time. This is just, it remembered what we did last time. So inclusive, the cell phone is actually $65.54 this time, $65.54. Inclusive, so that includes tax of $7.54, but the Jane's portion, and we can even say that here so there's no question, Jane's portion is the $33.90. We cannot claim HST credits that aren't related to business. We're going to hit save. That way the make payment pops up, and we're going to say that this was paid by the owner's credit card or bank, and I'm going to say owner's bank right here. And the payment date was up here, May 25th. May 25th. And it was the $99.44. So we're going to go save and close. Excellent. All right, let's see what is next in our list here. We've got one more. It's from Chocoholics D7198. I love that name. I really enjoy making this case study. And let's take a look at this and see what it says. So there's no payment note, so we just need to enter it as a bill. And last time, the Chocoholics D7198 had a note that it was not for her to just eat while she was working or for her an employee or for clients. It's actually for the gift shop. She wrote for sale in the gift shop. So we're going to make the assumption that this is a retail product supplier for her. We're going to go new bill and say Chocoholics D7198. And the date, where's the date? Oh, up at the top. We got to say May 8th, and that is bill number D7198. Purchases retail COGS comes up. It's set to exclusive, so we'll just say 199.92 HST, and we're going to go save and close because that was the last bill in our bills folder. So let's see what is next in April week 1. We'll look into the invoices, and it's some more garden design and installation for a client called Felix Cited. So let's go ahead, say new invoice. I did go over invoices in the April case study transactions. So the customer, we're going to have to add him. He's a new one. Felix Cited. Save. And the invoice date is May 9th. And the invoice number is usually up at our right here. And this was a garden design and installation for a pre-tax amount of 1140 after HST 128820. And again, that is what the total is here due. And there's no payment note, so there's not much we need to do with this other than say save and close. Take a look to see what the next item is in our invoices. So when I open this up, it's actually a check. And I made the bottom a little bigger to put a Gnome note, but if you open the one without the Gnome note, it's just the check. And what we can see here is that a client called Jim paid with a check, and Sarah used her mobile banking on her phone to deposit it. This means that this is a client payment that is not part of a combined deposit. So we don't actually have to use undeposited funds. But what's going to happen? Heads up, this check is going to bounce. But we don't know that yet. So let's go ahead and enter this as if we didn't know that this check was going to bounce. Okay, so I'm going to see if we can pull this over. All we need to do is go new, receive payment, and it'll bring us right to this receive payment screen. And the customer was Jim Nasium. And when we pull up Jim, the client, we can see he does indeed have an invoice 1003 for a total of $841.85. And we can see Sarah has noted that she deposited this on May 5th. I definitely suggest when you do mobile banking and you deposit a check with mobile banking, put a pencil line through it, because if something were to happen and you have to do it again for some tech reason that I don't know yet, you can erase the line. So mark it up, but with pencil. And also put the day that you put that mobile deposited that into the bank. So I do that for myself, even my non-business stuff. It's just a good practice to do with your mobile banking. Use a pencil and note when you've put it in. So Jim Nasium, it was deposited on May 5th. And the reference number, here's where I'm going to put the check number. And I'm actually going to say check number 022. And so what's going to happen is if Jim ever says what check bounced or I paid you with check number XYZ, we can look and see the client history where their different checks were applied to different invoices. So that's very helpful. You'll note that I don't always put a reference number in, but when there's a check number, I do, because I find the check crumbs very, very useful. Now, we've only been doing combined deposits up until now. And when you're depositing more than one check into the bank, or there's a combination of different things going into the bank in one deposit, that's when you're going to use undeposited funds. And I've covered that and actually how it can really cause some headaches if not used correctly in some of my videos in April. But this is not a combined deposit. This check is going directly to the bank. Do not pass go. Do not collect $200. Sorry, that's just Monopoly. So we can put it right to Canada Bank checking, and we'll check off that he's paid all of his bill. We could change it if it was a partial payment, and we'll hit save and close. And we will deal with the bounced check when we get to that part in the bank feed clearing of the video. Let's see what else is in the folder for us to do. The next in line is statements, and it is the CIBT line of credit. So Now that we're at the bank statements, we're actually at the bank feed clearing section of the video. But let's start first with the CIBT line of credit. I'm going to open this up and take a look. Now, this CIBT line of credit is what Sarah used to fix up the greenhouse and the watering system of the property that she's leasing. And you can see it's in her personal name. So especially when it comes to corporations, whether something's in the personal name or the business name can become an issue or a big deal. So again, something that you want to connect on the tax preparer or accountant with to make that final decision of how we're going to record things in the bookkeeping. But in this case, I'm going to talk about why we're going to treat this line of credit as if it is the business's line of credit. First of all, it's an easy one. She is a sole proprietor, not incorporated, so she is the business. So having a line of credit in her personal name makes sense because she's not incorporated. So this is a personal line of credit that she happened to use for her business. So that is part of how I make my decision. But most importantly is it had a previous balance of 0. It doesn't have personal stuff mixed in with it. Its sole purpose is to exist for the business. So even though it's a personal line of credit and in her name, it's 100% business use. This is very important. So again, if you are an entrepreneur, a business owner, just know that if you are going to use a personal line of credit for your business, don't put personal stuff in there. Because once you start mixing personal stuff in there, we can no longer reconcile it and make sure we have everything in. But more importantly, you can no longer claim the interest associated with the business because it's all mixed and mussed up. Don't do it. So if you're going to use a personal line of credit, have it be brand new or at least starting with a balance of 0 so that you don't have any personal related transactions going on in there. Sarah knows this, and wisely, she has decided to keep her personal line of credit clean of personal transactions, only used for business. And whether she told us that or not, we can see it because it has an opening balance of 0. And the only thing that's happened is that check for fixing the greenhouse and the insurance and interest. So let's talk a moment about this insurance and interest. So when it comes to insurance, right, if the beneficiary is somehow business related, then it is a business claimable expense. But if the life insurance is not related to business, so maybe your kid or your spouse will get the insurance payment and not some business related thing, then it's not a business related expense. So often life insurance is not a claimable business expense. Now, I'm not a professional accountant. I'm not giving professional tax advice. This is just what I've come across in my own travels. And I do advise that you speak to your accountant to evaluate your specific situation to know if that insurance is claimable or not. But in this case, this life insurance that's charged on this personal line of credit is only covering the line of credit, and we've already established that the line of credit is 100% business. So this life insurance is just covering the liability of a business liability and pay off the business liability if the business owner were to pass away. So in this case, because the life insurance is related to a business liability and being paid towards a business related thing, then this actually is claimable life insurance. But I don't put it under life insurance because I feel like it's more part of the interest and bank charges related to this line of credit. And besides, when we put stuff towards life insurance, out of context, an accountant or tax preparer might assume to not claim it because they might not realize that it's actually not a personal life insurance, but it's related to a business liability. So when I put this life insurance in, I'm going to just put it over to interest expense. Also, you'll notice that insurance has PST charged. Insurance is subject to the provincial portion of sales tax. It didn't get harmonized. But the PST or RST, so provincial sales tax or retail sales tax, when it comes to Ontario or other harmonized provinces, does not go to CRA. CRA doesn't get this. And because CRA doesn't get that sales tax, it's not a refundable credit or ITC on the GST HST return. So whenever we see PST in a harmonized province, we know we can't claim that as GST or HST. It is not claimable. We just put it into whatever category that it's charged at, right? And this category, again, we're not doing life insurance, we're doing interest. So, with all of that said, let's go to the line of credit bank feed and clear these 3 transactions. So I'm going to go to transactions and we're going to scooch over to the CIBT line of credit. And here are those 3 transactions. Always put a payee, never skip that. So this is who's charging the interest? It's CIBT. And this is not commercial insurance, but I go ahead and I put this towards interest. Now we've got 2 options here. We've got interest expense, which I generally use for credit cards or maybe overdraft with the bank. And there's also interest long-term debt. And I use this if there's loans that are going to be amortized over a long period of time. This credit line is $11,000. It's kind of in the middle. I don't know if she plans on paying this off, within the next couple of months or not, or if she plans on taking her time to pay it off. But because there's no long-term payment schedule, like with a loan or a mortgage, I'm going to go ahead and say interest expense. And it's exempt and everything looks good. So I'm going to say add. And again, this is the shortcut way of putting in the big screen expense. So if we were to look to see at what just got entered, it would have been an expense entry. This is what we just put in. We just put it in the shortcut way. And by putting it in the shortcut way, it's married to the bank feed info line, and it's gone ahead and put a little check mark and cleared it on our bank reconciliation for us. So these are the benefits of doing it the shortcut way. And we're going to do the same with the other 2 items as discussed. So CIBT, interest expense, and we're going to say out of scope or exempt. Again, as I've mentioned, when it comes to the expenses, it's not as important which 0 you use, but it is hugely important which one of those you use for sales. And I go over that in my April videos. And here's the actual interest, and this is CIBT. And we're going to say, you can say 0 rated. And we're going to say add. So we've cleared all of the CIBT line of credit. We happen to have the statement up, so let's see this all the way to the end. There's going to be a few things. We also have this payment note that we don't want to forget to enter as well. So let's go ahead and put this in. She's paid $250 by e-transfer from the biz account on June 1st. So let's go ahead and put that payment in. Again, there are a few different ways to enter this. We could do a transfer because it's from one bank to another. We could do a pay down credit card. We could also put it in with an expense. I'm going to go ahead and put it in as an expense. So we paid CIBT and we paid them out of the Canada Bank checking, and we paid them on June 1st. So on June 1st, that's May 1st. There's June 1st. So on June 1st, Canada Bank checking goes down. What goes up? So I'm going to say e-transfer right here. What goes up? Well, the money goes over to the CIBT line of credit. And it remembered the description from when we entered it from the bank feed. I get rid of that. I always get rid of the stuff that doesn't belong. And then 250 was paid, and that's out of scope. And we hit save and close. So it's one of the 3 ways to enter that. And now we can go ahead to the reconciliation screen and let us reconcile the CIBT line of credit. Beginning balance is 0. Let's bring this up. And the closing balance is $11,311.22, and the date is May 5th. So let's go ahead and put that information in. So statement ending balance is 11311.22, and the statement ending date is May 5th. Start reconciling. And this is the beauty of the bank feed. Whenever we clear something from the bank feed, it puts the little check mark in. And you can also see that we've got the dates that the check was written and then the date that the check cleared the bank. There's no white lines. Remember, that's important. If there's any uncleared transactions, you want to either agree with them or clean them up. And there's none to agree or clean up. It's all done. This is how quick it is. So we go ahead and finish now. Now, I also attach the statements. I like to keep everything together. It's something that I think is useful, especially if you've got a tax preparer coming in. We just let them know that if you go to the reconciliation screen and you can see any of the statements that you might want to see. So if we go ahead and attach, it just makes communication in life easier. I mean, I have it open now, so I'll put it in now, and then we don't have to look for it later. Something else that's important is that there's some banks that only hold onto the statements on their online banking for 3 months. And after the 3 months is done, you can no longer get it. You have to go to the bank, order it, and pay money and have headaches, and it's horrible. Bank of Montreal, business banking, and credit card, business credit cards. I'm looking at you. That is not useful and very frustrating. I don't know who else does that, but save your bank statements because they go stale and disappear sometimes quicker than others. So we'll hit done. And that was it for the documents this week, but we're not done with our bookkeeping. We're going to go ahead and we're going to clear our bank feeds. So if you remember from before, I always start with the credit card, go to the savings line of credit, and then end with the operating account, because sometimes the operating account is putting $1,000 here and $1,000 there, and it's much easier to see that money coming in from the individual smaller accounts. But we've got nothing going on in the triangle. We did the CIBT already, so we're now left with these 8 transactions from Canada Bank Checking. So what I like to do is I like to match what we know first and then go back and clean up the what I call lonely singles. So right away we can see it's got 3 suggested matches. Now, in terms of the bank feed, it's very important to know that the first 2 columns are coming in from the bank. So this is the bank only says it's check 013. And the bank also says how much was spent or received. So the amount and these first 2 columns at the beginning, the date it clears, not the date it was written, the date it clears, and the bank description. QuickBooks is guessing in the middle, right? This is just a guess. So the bank is not saying that this is Kamal. QuickBooks is guessing that this is Kamal, okay? So if we had any doubt or weren't sure, we would need to wait for the bank statement to come to show us the cleared checks. And that's where we would see what the actual check says. But in this case, we did write a paycheck for Kamal on the Friday and it cleared the bank on the Monday. And in fact, what would have been helpful is if we had said what the paycheck number was, and then we would be able to match this with confidence. When we hit match, again, we're taking that bank feed info line and we're marrying it to the QuickBooks transaction that's already in. So hit match. As I go through and I match these things, I look at the dates, right? Because in the middle, we don't necessarily trust that that's what's coming from the bank, but the bank says May 5th, right? And let's expand this one out. And we have a bill payment paid that we named 015 and the bank says 015. So even the dates are a little off. It makes sense. We wrote the check on the 29th. He cashed it on the 5th and we said it's bill payment 015. So check number 015 and the bank says that. So we can go ahead and click match. Don't go too quickly through the bank feed because your mind is going to get click happy, right? You're going to sort of yes, 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 yes. And you're going to marry a bank feed info line to a QuickBooks transaction entry that isn't its soulmate. And then they might have to get a divorce and it gets messy. And that's how bookkeeping works. So right here, we've got a mobile check deposit. We just put that in. We said it was Jim Nasium and it came through. We're going to go ahead and match because that's what we would do. But we're going to have to fix this or clean it up or make a decision. So we're going to hit match for now because that's literally what happened. Jim was trying to pay his bill. So here, the Insuranators, we haven't set up a rule yet. And you can see because we haven't set up the rule, for some reason, QuickBooks thinks that this is equipment lease. Now we put this in already, and we can go to categorized and we can search Insuranators. And we can see that we put it to commercial insurance last time. So why QuickBooks is not remembering that we did that, I don't know. Sometimes it does, sometimes it doesn't. So that's why we set up rules to tee things up so that we don't have to keep checking that QuickBooks has gotten it right. And not just that, another really great reason for a rule is we only have to figure something out once, right? So if you are getting charged by Adobe every month to your credit card and you're like, I wonder if it has HST or not, you go, you look at it has HST. So then you can say, every time I see this now, just set up the rule, this says HST, office expense, and on with my life. So 2 great reasons to set up bank rules. You can see that QuickBooks is guessing wrong here. So let's set it right. This is commercial insurance. So we know this is commercial insurance and not auto insurance and not life insurance because we saw the insurance paperwork and we attached it to the first entry. So we should have set up the rule at that time. So we're going to go ahead and say that it is exempt from HST. Yes, try and remember next time, please. And I'm not going to hit add. I'm going to click create rule. And because we have this sort of lined up already, when we hit create rule, it's sort of lined it up down here for us. We're going to call this Insuranate. I made the word up. So there it is. Insuranators, commercial insurance. And again, we're not going to just say, if it says Insuranators, we're going to add another condition and we're going to say that the amount equals 102.15. So now if another insurance charge comes through, we'll be able to say, oh, this doesn't have a rule. I wonder what this one's for, and ask Sarah for the policy paperwork. So we're going to come down. This is commercial insurance exempt because we set it up over here. It carried it over. I don't want to replace the bank memo. I hate how it defaults to that. You can assign more if you want, but I want to have the existing bank memo. And as I said, we don't auto add because you want to see it. Now, there are things that I am going to auto add, but I'm very, very restrictive about the things that I auto add because I want to see the things happen and make sure I don't miss them. So we're going to go ahead and hit save. Now we can see that this rule is all teed up for us. We don't have to change it next time. We don't have to think about it next time. There's a rule. We can just glance, yes, I'm happy, and hit add. Next, we have this check for 3390. We won't be able to see who this is from until we get the bank statement. And once we get the bank statement, the physical bank statement, it will show us the cleared checks. Doesn't show us deposits. It only shows us the cleared checks. And when we see that cleared checks, we'll see who it is for. But I do have a sneaky suspicion. I'm going to go over to suppliers because I just did March's bookkeeping. And in March, I saw that there was a check to Potts Properties for $6,780. And this $6,780 was first and last month's rent of $3,000 plus HST. And so the April rent on April 1st and then last month's. So if we're paying $3,000 plus HST every month to Potts Properties, I have a pretty high degree of certainty that over here on the transaction list, this $3,390 is also from Potts Properties. Now, I don't know for sure because it doesn't say here who the check was written to, okay? And we haven't seen this $3,390 on its own occur otherwise. So the safest thing to do would actually be to wait for the bank statement to see who this check was written for and if there's a memo that tells us why. But because I did the case study and I know for a fact that this is Potts Properties, that's one reason I feel confident putting it in now. But also I have a high degree of certainty that's probably what it is. If she's paying $3,000 a month and this is on the first, it's check number 2. Right? She's probably given a bunch of predated checks to him. So let's go ahead and say Potts Properties, and this is rent expense, and there's going to be HST in that, like this, and I'm going to go ahead and hit Well, we can create a rule as well. I'm not going to create a rule until I see for sure. I think we'll create a rule in June once we see that this definitely went to Putz Properties and not to one other name. I don't want to make a rule based on an assumption. So I'm going to go ahead and click Add. Now we are left with these 3 transactions that we get to attack. And we can see that there is a item returned NSF, there's an NSF fee, and there's also an extra e-transfer. And this e-transfer auto deposit doesn't say who it's from, but it's the day after a check bounced for $841.85. So $841.85 plus 40 is $881.85. So I would probably ask, you know what? I might add to the paperwork, and you know what I'm going to do? I'm in the middle of recording, so I'm not going to do it now, but I'm going to add to the paperwork an e-transfer confirmation saying that this was from Jim Nasium to pay for invoice number 1003 that bounced with the check regarding the check that bounced and covering the NSF fee, so that if people are working on this case study without the videos, they'll have that high degree of certainty to know exactly what the 881.85 is. So saying out loud, that's going to be part of the case study source documents, that we know that this is actually going to be Jim sending an e-transfer to cover the bounced check. So one way, if you're doing this sort of a week after and you're like, what check bounced? One way of doing this is 841.85 in the search bar. We're going to go to categorized. And by searching 841, we can see that on May 6th, there was a mobile check deposit from Jim Nasium. And then on May 7th, it was returned NSF. So high degree of certainty that this was Jim's payment. So there are actually a few different ways to put a bounced check into the QuickBooks bookkeeping. I'm going to show 2 today. I'm going to show a long way and I'm going to show a short way. The long way is helpful to track it in the accounts receivable subledger. The long way is also helpful if the bank's already been reconciled and you don't want to have to mess around with clearing and unclearing transactions on a reconciled period. And it also is a great way to show you the inner workings of the accounts receivable subledger. So let's start with that way, and then we'll move on to the quick way next. So this is the longer way. So I'm going to go and find the payment that Jim gave us for $841.85. I could have gone to the customer list and got to it that way. And this did clear the bank. We did have $841 go in, but it did not pay this invoice. This invoice is still unpaid because it got returned to us. So basically, we're keeping the payment, we're just not applying it to the bill. This transaction will create an additional credit in the amount of $841. So Jim is going to have a credit on his account. So I'm going to go ahead and go, and you can even add to the memo, check returned NSF, just so that somebody, if they're looking, wonders why this was not applied to the invoice. We're going to go save and close, and it's like, hey, are you sure you want to have a credit? Yes, I would like to have a credit on the account. So now that this invoice is now unpaid, I can go ahead and add this payment later. But before I do that, let's still deal with this returned item NSF. And so I'm going to go ahead and put this in as an expense. I'm going to say that this was Jim, and the category is accounts receivable, okay? And that it's out of scope. And so now that I've put this to accounts receivable pointing to Jim Nasium, I'll go ahead and add. And if I go over to sales customers, what we'll see under Jim's transactions is there's that expense that we just put in, because I said accounts receivable in the body of it, and we can jump to it. Oh, it's right there. From the box here to see what it looks like. We can see it looks like a regular expense, but I've got accounts receivable in the category with Jim Nasium, the customer, and the payee. Some people do that with a journal entry. That works as well. But as you can see, this works just as easily. But if I were to show the open balance again column, which I love, and I try to add to all of them, we can see that the expense is open and the payment is open. If we were to go to the accounts receivable report, you'd see them all open and unapplied. So you can see all of these transactions from Jim Nasium. I mean, they all add up to him still owing us $841.85, but I want to clear these two off. And the way that I clear these two off is I can go ahead and go into this payment. And instead of this payment of $841 being applied to the invoice, I'm instead going to apply it to that expense. And I can hit save and close. So now when we go back over to sales, customers, and Jim's transactions, we can see that the balance of this expense and payment that we put in is now 0. And the only thing that's open is the $841.85. So anyway, that's how I've put in the bounce check. So let's see how I would do it a different way. So to do it a different way, I'm going to go ahead and I'm going to delete these things that I've put in. So you're going to go more, delete, delete. And then this payment. Well, that's part of the discussion over on the bank feed here. So if I'm here in the bank feed and I see, oh, that check, it was actually bounced. Oh, I got to fix that, right? We can go ahead and go to categorized. We can go find that payment there. We can say more delete because he didn't actually pay. Instead of matching this mobile check deposit in as a payment to an open invoice here, I'm going to change what this shortcut way is doing and say, actually categorize this, please. This is a deposit. It is from Jim Nasium, right? And it's actually going to go to a general ledger account that I call NSF error clearing. And I use this for in and outs. I don't exclude them. They actually happened. I want to see them go through the bank and I want to see them on the bank statement. But they're just temporarily so. They're reversed later sort of thing. So that's what my NSF error clearing GL account is for these reversed things. And we could say in the memo, you know, the check number 022, if you remember that is what it was, paid by Jim, returned next day, like that. So we know to look out for it. So we're going to go ahead and hit add. And when we do that, there is going to now be a balance in our NSF error clearing GL account. So I'm going to just go head over to reports and I'm going to jump to the balance sheet so that you can see that as of May 9th, we actually have a balance in our NSF clearing of $841 and we want that to go to 0. You always want your NSF error clearing general ledger account to go to 0. It's kind of like a bridge that you use to put something, or a shelf. I'll just put it on the shelf until later. So let's go back to this transaction. Here is the NSF check. So who is that from? That's from Jim Nasium. And it's not accounts receivable. We want to take it off of the shelf now. Take it out of the clearing account. So there we go. We're going to go ahead and hit add. And now if I were to go into this NSF clearing account, the balance is now 0, because you can see here it's coming out of there for the mobile check and then going back in when the check is returned NSF. So using an NSF clearing account, and now you can see it's back to 0, that is another way to deal with bounced checks. But I don't love it. It's useful, but the reason I don't love it is because if we go over to sales now and we go over to customers and we pull up Jim Nasium, we don't necessarily see that he gave us a bounced check. So the first way that I showed you that was a little bit longer, actually didn't take that long, it shows us the actual history of the payment and the bounce in the accounts receivable in the customer transaction list. So that's why I actually prefer the other way. So I'm going to quickly put it back the way it was. And I can do that just by going here and saying the last two things I put in, please delete. So more, delete, delete, which pops it back up there for me. And then here, the deposit, we'll just go ahead and delete that one as well. Delete, those are the two things I put in. And I'm going to refresh this so that QuickBooks adds the payment option to match. Now, while I'm here, it's an important distinction. This is not matching to the payment that we put in. I deleted that for illustrative purposes, right? I deleted that check 022 that bounced. And so because I deleted it, it's offering up an open invoice. So this should actually say add payment and match, right? But it's not matching to existing payments. That invoice right now is unpaid. It's ready to be paid, receive payment. And if I were to go ahead and hit match, it's going to add the payment and then match it. So when it said open balance, that's very important for you to notice. Again, you're going to be click happy, right? We're going to look in week 3 of May. Sarah's going to bill out like 4 different jobs at $565. And we're going to see how that offering up a match for a payment that's not yet entered can help us be a bit click happy and maybe misallocate payments. So these are important distinctions to be aware of. So before we go and fix that payment, let's go back and take this NSF and not to NSF clearing, but to accounts receivable. And let's go ahead and hit add. So now when I go back to the payment that we just entered, I can just say, nope, this didn't pay the invoice. It paid the NSF expense entry. So again, I think I called it the long way, but it's actually pretty quick, isn't it? So save and close. Yes. So we're almost done. We have the NSF fee, and then we have the e-transfer of Jim Nasium giving us back not only the money for the check that bounced, but also covering the NSF fee. So first of all, the NSF fee is pretty easy. It is from Canada Bank is charging us a fee. So we put their name in and they're charging us bank charges. And that is 0 rated like this. Oh, yep. Does it say bank charges? It does. Sorry, add. And now how do we put in this amount that was received? There are going to be a few different ways to do this. I'm just going to go ahead and show you the way that I would do it. So let's go ahead and add a new payment on May 8th from Jim. And we're going to say new. We're going to say receive payment from a customer, Jim Nasium, and that was on May 8th. And it was, I'm going to make this a combined deposit, right? He's paying an invoice and giving us some bank fees that that were incurred because of him. So when I do a combined deposit, I use undeposited funds. So he's paying all of his invoice, $841. And I'm also going to say e-transfer plus 40 for fee. Plus 40, I'll say, just in that reference number. I could have put that down in the memo. Payment total was $881.85 to cover $40 NSF fee, like that. Crumbs everywhere. Otherwise, people will think he just gave us $841.45 if they're looking at the transaction list for Jim. So if I go over to sales, customers, oh, he was up there. Jim, we can see that having that information in there will help people realize he gave us more than $841 because it's not showing us $881 here. Then I'm going to go to new bank deposit and I'm going to say on May 8th, Jim gave us $841, but he also gave us Jim Nasium bank charge. He reimbursed us those bank charges. That's how I'm going to put this one in of $40, and that's out of scope. He just sort of reimbursed us. This isn't a rebilling. When things are rebilling, we're going to have a topic for that coming down the pipeline. For this is just a quick $40 that he's covering that was charged to us by the bank. So this is one of the ways to do that. So now that I've manually entered this combined deposit, it totals $881.45. His e-transfer plus the 40, putting it towards bank charges. Going to go save and close. We're going to go back to the transactions. And there it is, ready for us to marry to the QuickBooks transaction. And we are now done. So I did not use find match today. There were a couple of times where I could have used find match, and there is a reason why I didn't. And I'm going to reveal that reason in next week's case study course documents. We're going to do find match. We're going to see what it does and why I don't love it. But I think that we have covered enough in the video today. Thanks so much for watching. I hope you found the information helpful in the building, growth, and success of the business you are working in and on. If you're interested in downloading the case study source documents, or if you have any special requests for topics you'd like me to cover in upcoming weeks, you can find out more information in the link below. If you found this video useful, don't forget to subscribe to my channel. I'm also at Nifty Gnome on Twitch and TikTok, and you can find resources and courses about running a Canadian business on my website, naomiwilkins.ca. I love making business make sense. The video today was recorded in beautiful Newcastle, Ontario. Thanks so much for watching, and get out there and be that business that thrives.